Hi, this is Alessio. Hope you're well. With a quick update for you on the financial markets. This video is going to be quite important because what I'm going to reveal to you and show you in this video could have major implications for the rest of the year and quite potentially also the next few months as well. So I'm going to show you some interesting things here in this video, plus also a potential warning signal and also what this chart potentially could mean as well. Let's begin first of all with this chart. This is the chart, the S&P, the stock markets going back from 2009. So as you can see here, guys, we're looking at the financial markets, the stock markets from 2009, from the lows we made that year to the 2020 highs that you can see all the way here. So a span of almost over a decade. Notice that in this major bull market, we had several clues as to when the momentum was going to go up. So let me show you this. So this bull market that's been happening now for almost over a decade has been punctuated. Notice down here at the bottom. So for example, back in 2012, notice what we had here. We had a pulse signal that fired to the upside, as you can see here. That's when the red dots turned to blue dots with green momentum and with an early signal. This blue little dash, this little blue bar you see here is called an early signal. I use this in combination with the trend and the gamma confirmation. So when the gamma confirmation is blue and when the trend is up, I only ever look at the blue early signals, essentially indicating this pulse might fire potentially to the upside. That means in an uptrend, and when the gamma confirmation is blue, I would be ignoring any of the red early signals or negative early signals. So that was one major bull market signal right there, as you can see, which fired to the upside. And that drove the S&P significantly higher, as you can see. Then we had another one back in 2016, as a matter of fact. 2016, we had several early signals on the pulse, with gamma confirmation being blue, again showing to us the path of least resistance is the upside. And again, this pulse eventually also fired to the upside, pushing this bull market higher from the 1800s all the way up to 2800s. And then we had another one, as you can see here. So I noticed that last pulse that fired off back in 2019. There it is. This pulse had fired off in 2019. We had several early signals here in 2019, which again, with gamma confirmation being blue, showed a higher probability that this market could potentially move higher. Now, here's where it gets interesting. Notice something has just happened here on the pulse there, on the right-hand side. There is a warning signal on the stock market right now, and as also on the Dow. The Dow also is giving us a much more extreme warning signal. I'll explain to you what that is in a few minutes. Before I do that though, let me first of all mention to you this, because I mentioned this particular warning signal, you may remember, in my video back in December of last year. If you recall my video from last year in December, I was in Belgium and I made this video for you. In fact, the video is called Here's What Usually Comes Before a Major Crash. And in that video, here's what I said. Listen to this. Now notice that in 2007, 2008, when the pulse fired to the downside and the momentum fired to the downside, bearish momentum led to the major crash that occurred back in 2008. Now here's the bottom line. If the momentum now on the monthly time frame, which has now been bullish, if that turns around and becomes negative, we see the momentum turning negative and going down again, bearish momentum or downward momentum on the monthly time frame could suggest a major drop or potentially a major crash in the stock market. So what I'm really looking for, I'm looking to see if that momentum on the higher time frame, on the monthly chart time frame, can turn bearish. In other words, go the other way, like it did on the other examples I'm going to show you here in this chart. Now at the moment, nothing suggests that the momentum is going to turn around, but I am keeping an eye on that, because if that momentum does turn around, become bearish again, go the other way, especially if the markets start breaking support levels, then that could suggest quite a dangerous situation and a bearish situation for the stock market, especially in the year 2020. By the way, guys, I don't know if you noticed, but there was a woman behind me, kind of a young woman behind me, looking at me. People have asked me, who is that young woman behind you? Guys, I have no idea. I only noticed her when I was editing the videos, so I really got no clue. I know it looks kind of creepy. I'm going to guess she's probably a member of the Illuminati, and she's just spying on me.
What you just said is one of the most insanely idiotic things I have ever heard.
Yeah, guys, I know, I was only kidding. Obviously, I wasn't serious. All right, let's continue. So bottom line is, guys, as I showed you in that video, the main takeaway is when the momentum suddenly dissipates on the pulse. So as you heard me mention in that video, it's when the pulse suddenly dissipates, when it goes the other way, that it becomes a major warning. So look at this. This pulse had fired off. Now, we had several early signals back in 2019, but this pulse fired off last year. okay, pushing this market up. But look what happened here. The momentum now has suddenly gone the other way, which is not surprising given this extreme drop in the stock market. Now, what does that mean? It means that there could be potentially further declines in the stock market. And usually these sort of reversal signals, especially on the momentum, happen before a major bear market. Because remember, guys, this is a monthly chart. This is not a daily chart. It's not a weekly chart. It's a monthly chart. So when the pulse suddenly changes from positive to going the other way, so when the pulse suddenly goes, from going up to the other direction, that is not a good sign, especially on a monthly chart time frame. All right, guys. So that's why, guys, I said to you back in Belgium that I'm going to monitor and keep an eye on the situation here, because if this momentum suddenly starts changing and going from positive to less positive, going the other direction, that could potentially be an early warning signal. In prior occasions when that, in fact, when that momentum started changing, it did actually, the market started rolling over. For example, here, the market started rolling over, going the other direction. It took a few months, though. It didn't happen immediately. But that's not all, guys. There is something else I need to bring to your attention, too. So not only have we got the momentum going the other way, so not only we got momentum dissipation. By the way, we need to wait and see how the month of March actually ends. This is the month of March. We don't know how the month of March is actually going to end. But I'm going to guess that by the looks of things, this momentum bar is going to look the same. I don't think it's going to change that much. But that's not all. I spoke to my good friend Charlie Burton, and Charlie mentioned to me something quite interesting. He said this pattern on the candlestick charts is what's called a key reversal signal, a key reversal candlestick pattern. So what's that? A key reversal candlestick pattern is essentially what you're seeing here. So that's the kind of pattern you're looking for. After a major rally in the market, you're looking for a pattern or a candlestick pattern that looks like this. All right, guys, notice kind of a bearish engulfing pattern that takes out the trend line, takes out support. Now, here's what's interesting about this. Usually after a key reversal candlestick pattern like that, or shall we say like that, which is on the S&P and also on the Dow, very similar chart pattern on the Dow as well. So both the S&P and the Dow are showing the same signal, a key reversal pattern as indicated by my friend Charlie. And again, notice what happens after usually a key reversal signal. Usually there's a bounce. Usually there's a positive bar, as shown to you by this bar. So usually after a key reversal or a major bearish engulfing pattern, you see a sort of a positive bar, a green bar, and then followed by further declines. All right, guys? So that's really interesting. We had an example of this in 2018. Notice what happened here in 2018. Something quite similar, not the same, but similar. So we had a drop back down to the 21 EMA, then a positive bar, as you can see here, then followed by another drop, as you can see here. And notice this happened with declining momentum, as you can see here. That's not all. Let me show you one more. In 2015, a very similar pattern. So we had, again, declining momentum. Then what you had is a major drop to the 21 EMA, followed by a bounce, as you can see here, followed by the green bar, and then another drop, as you can see here. So this pattern that we're looking at here right now on the S&P and the Dow actually is more potent, is more strong, because we actually have, again, as Charlie says, a key reversal candlestick pattern. So what we're looking for right now is a green bar. I'll explain to you why in a few minutes. By the way, let me show you one more thing. The pattern on the Dow is even more extreme, because not only do we have a key reversal signal on the Dow, as shown to you by this bar, but also look at this. This is what's called the middle finger signal by the markets. In case you're wondering why it's called a middle finger signal, because if you look at it, it actually looks like a middle finger. Momentum is rising here. As you can see, momentum is rising, right? The pulse fires, and then suddenly the next month it drops back down again. That is essentially what is called a middle finger salute or middle finger signal by the stock market to us, which is not nice, but essentially what the market is doing here is saying, so the market's saying, oh, you think I'm going to go higher? You think this momentum is going to push further higher? Well, guess not, it's not. I'm going to go the other way. When something like that happens, when you get a middle finger by the stock market at us, that essentially is quite a bearish signal. It's a warning signal. It does not necessarily mean, there's certainty that we're going to definitely go lower, but it does increase the probability. All right, guys, and in this case, not only do we have a middle finger signal by the Dow, by the momentum here, but also we got a key reversal signal and this. Let me show you this. I mentioned to you this last week. This is what usually happens after the Federal Reserve does an emergency rate cut. As I'm sure you probably know, last week we had an emergency rate cut by the Federal Reserve. People think that's good, but it's not, because history shows that long term it's not very good. Short term, yes. Take a look over here. Short term, as you can see here, the signal actually is pretty positive. So after the US Federal Reserve makes an emergency rate cut, in the next 30 days and next month, usually you see positive results in the stock market. a positive bounce in the stock market. Now, let me just say this. We haven't yet seen that kind of a bounce. Some of you watching this video right now, you're probably thinking, well, we had a bounce last week, right? Guys, that doesn't count. We need to see a bounce on the weekly and monthly charts. At least one of those charts. We've had a bounce, sure, but that's not good enough. We actually need to see a weekly bar that is green. We haven't got a weekly green bar. We haven't even got a monthly green bar either. All right, guys, they're both red. Therefore, what we need to see is a positive green bar right now on the stock market in the next few weeks. And guys, this data tells us that very likely in the next few weeks, again, and potentially in the next 3 to 4 weeks, we could see a positive result in the stock market. In other words, a bounce. I think very likely, guys, in the next few weeks, we could see a major bounce higher. But guess what, guys? The next 6 months and the next 12 months is not very good. Notice the results are not very good the next 6 months. Actually, look at this. The next 6 months, there was a 16% drop here back in 2008, followed by several negative bars. And over the next year, it's even worse, as you can see here. Several negative results here. The outlier, the exception to the rule, was the 1990s. But I don't think this is more of a 1990s scenario, although I could be wrong here. But the bottom line is the probabilities. On average, the probabilities seem to favor another major drop, as shown to us by this table. So the probabilities seem to favor, on average, further drops after the initial bounce, after the major bounce that we're going to see in the weekly and monthly charts. All right, guys? So we haven't got that major bounce yet, as shown to us by this chart and shown to us by this. So what I'm going to wait for, guys, over the next few weeks is to see a green bar. I want to see a green bar on the monthly and also very likely the weekly charts as well. Once we see that green bar, maybe even going back to fill that gap. Notice the gap has not yet been filled on the S&P. So there's a massive gap here. I'm sure I mentioned this before. This gap here has not yet been filled. Are we going to go and fill this gap? Possibly. But bottom line is, guys, we haven't got yet a major bounce on the stock market. I think that's the most likely situation right now after this major drop. Potential bounce. All right, guys, I think we're going to see a potential bounce in the next few weeks, at least in the next month. And then once that bounce potentially completes, yes, guys, I think very likely we could see another drop further lower on the stock markets. That, to me, based on the data I have in front of me, seems to be the more likely, the most probable scenario, especially given what Charlie has just mentioned. Again, the key reversal signal on the S&P, and also the middle finger salute by the stock market. All right, guys, hope this video helps. And by the way, guys, if any of you do figure out who that young woman was who was creepily spying on me behind me, please tell her, just stop following me. Honestly, my life is not that interesting. Thanks very much. Bye for now.